All right, let's jump into it. So, where we are, 12 o'clock on the Saturday. So, a little bit earlier in the weekend for myself for these weekend reviews, but gives it a chance to see how things sort of closed up into the end of the week. Geez, it's been such a hectic couple of weeks, actually. The markets have just been very, I mean, look at this is a weekly sort of chart. This is Aussie that we'll start off with here. This pretty much sums it up here, up, down, up, down, up, down. Perfect for your in and out trading. But you know what I mean? Like we've got this sort of large move here, which we're trying to get the sort of break and move forward on. And you know, it's this what one, two, well this week didn't really get there, but three, four attempts to get over this 67 mark. And you can see this just smacked time and time again. It's just such a heavy resistance. Once this goes, it'll be a big one. That's the thing. It'll definitely sort of pop. It's just a matter of sort of, you know, consolidate this period and then we can move up a little bit further. I mean, you could pretty much see this as a bit of a sort of flag breaking out here is as long, of course, you know, we don't want to sort of drop. I mean, you could drop down a little bit below this, say, test the top side of this falling resistance here, previous falling resistance, hopefully now sort of falling support. But, you know, ideally, obviously, sort of stay up in this range. We did see a fairly strongish kind of push towards the end of you know, close. I mean, say strong push and that, we're talking sort of maybe 30 points or so, but you know, we'll get to that in a moment on the lower time frames. But yeah, I mean, look, this does look like it's broken out here. It's consolidating. Once we get the break here, we've got some pretty decent sort of looking price targets, which takes us pretty much up in line with where we've seen the market value these things previously. And this is what I tend to think sometimes that, yeah, I mean, it's always better when you can see it in hindsight, but these measured moves aren't just picking arbitrary pie in the sky kind of areas. They tend to almost sort of line up with other areas to give that sort of confluence of sort of like, you know, where people you'd expect the sellers to be. Like for this instance here, you've got your first leg up here, you've got your consolidation, your second leg up here. This happens to come pretty close in line with these ones over here. You know, we're not sort of consolidating and then sort of breaking from this top part up here, leaving us up with a price target kind of in no man's land. I guess you could say, you know, but that would be the top wicks over here. But yeah, so at the moment, look, consolidating outside this big falling resistance. I have seen this falling resistance drawn a little bit differently. I think somebody was popping it along. Where do they have it? Maybe like this or something. A second sort of thing, which would give you that top end up here, kind of bypasses this, hits this one here, and I don't agree with that top line there. I think this yellow line that I've got here is a little bit stronger, in the sense that sort of you can see that get rid of this one. You know, it started off from, you know, last sort of drop down. This area here, it obviously price tried to move through before rejecting, so it was unable to close above. Kissed it and respected it perfectly. We have a little fake out, which got that last push down in here. And then obviously out and now consolidating, back testing and supporting with the top side of that line. So this chart is very reminiscent, and I've said this a couple of times. If I just flip across to copper and we look at copper around this period as well, well, not around this period, but similar price action of it. You had the breakdown, a little fake out area. Let me zoom in this a little bit here. So this is, again, it's on the weekly, so it's a high time frame move, but we've got quite a strong line here that we can see markets respecting. It had its sort of like little sort of test fake out area, smack back down in, kissed it out like by a couple of points out here, sort of back down underneath, broke out and then consolidated. This consolidation, though, admittedly, I mean, if we look at this was a consolidation of, you know, despite that last little fake out move to the downside here. 15 days. So this is 15 days. Sorry, no, 15 weeks. Geez, I've remembered this. This is like this is such a nightmare. But again, these kind of things, the longer it's in this period, you got to think everybody's shorting it. Everybody's saying copper's. I remember people talking about copper and they're like, oh, you know, it's going down over here and all this kind of thing and that. And, you know, when the market's all talking about it going in one direction, you've seen this line, how many times it rejected here. 1, 2, 3, 4, came back up, maybe 5 here. Excuse me. The amount of stops that would have been up around this area over here. And we can see this here. Once we break out, come back here, stops around this area, boom, broke up and moved up over here. So this is kind of where Aussie is at the moment. And I'm not saying it's going to consolidate, or I hope it's not going to consolidate for 15 weeks and that going through here. I mean, look, we're coming into the US summer, the European summer. There's a chance that, we just see garbage trading like this. I mean, if you look back at the start of the year, I know I'm flying chart to chart to chart, I'll get back to Aussie in a moment, but remember these parts at the start of the year, I mean, it doesn't look as bad here, but this is DXY. If you remember back to the start of the year, these consolidation periods through here, oof, geez, it's just like just nothingness, nothingness, poof, nothingness, nothingness. It's just incredibly mind-numbing to trade these periods. So hopefully we're not moving into that. But for the here and now, for the purpose of this sort of call where we were on the weekly, let me get back to it. We've got a pretty well-defined little range here. Jeez, alerts going off all over the place. We've got, this area here, obviously, last week. Last week ended on a pretty bad note for everything. Gold got smashed right down. You can see, look at this big bearish sort of candle coming down here. But market defied it. Market actually sort of came back up and took out the tops of those of last week's highs with this week's highs. A couple of news-driven sort of pieces, and that obviously was such a hectic week in that we had FOMC, we had CPI, we had NFP. Previously, obviously, the week before in that, but all those things within 6 day period. We had PPI, which was a bit of a non-event. In hindsight, I'll get to that again in a bit. But so it was a very news-driven week. It was massive after not having much for a while. So anyway, long story short is Aussie's moving up. It's consolidating here. We break above 67. For me, that's confirmation. We've got a pretty good sort of like little area where we can call our price targets pretty much up in this zone over here, which will sort of mark up. There we go, price targets up over this zone over here. Look, the measured move technically takes you a scratch higher, but again, we haven't actually broken out yet, so maybe it comes back down, retests the top side of this bar here, and we get a push down to 65.50s, and then we get a move back up over here. We get much lower than this underneath these wicks over here. You wouldn't want to be coming back down here. You come back down towards this 64, under 65. Things are going to be looking a little bit sticky, a little bit sort of drama filled. But, at the moment, we are looking like we're attempting to make this move back up here. Again, the bigger kind of move that we're looking for is this big sort of inverted head and shoulders with our sort of, again, pie in the sky. These things do happen. Price target up around here, 75. As to how quick this happens, well, I think it's going to take a little bit longer than initially thought. Like it was never going to come quickly, but the idea was that RBA's very much turning a little bit hawkish. We've got some ideas of potential rate hikes. If we hike and then the Fed gets the data that they need to see, they see lowering CPI, they see sort of jobs, sort of NFPs and that sort of slowdown. Basically, if we see an economic slowdown from the US, while we're seeing Aussies charge on, or the RBA charge on with like a hawkish stance and potentially rising, then I think they're going to be the things that are sort of like, going to get Aussie really moving up and getting out of this area over here. But again, pretty defined sort of breakout lines above the 67. I think sort of, we got mid to high 68s definitely on the cards. As the moment, price target takes you up to sort of 69. I don't think you're going to go through straight away. These things don't happen like that. I've said this 1,000 times. You don't go through things. You don't just unless it's like a massive sort of move. But generally, what you'll see with price action like this, you'll see a move up to here. You'll see a push back down. You say this consolidation. Build up some liquidity. Build up some more stops around this area. People that have like shorted it like this, they've shorted it like this, they've shorted it here. Have them sort of go, hey, you know what? We're going to have another go, and let them pile on their weight to short these things. Put their stops above here. That'll be the fuel that'll get you to go past this, and then you'll see that explosive move up to the top side there. So this is what I'm expecting to happen. I can see a move towards high 68s, then a consolidation period through here. Again, you can see here, it may take a couple of weeks to move through, but then once it does go through, you'd have your stops, you'd have your breakout line up here. This is going to be a big one because we haven't been up here since Feb 23, and this was coming down negatively. I mean, really sustainably up above this level. I mean, look at this, like 2-3 weeks period over here, 2-3 week period, or 4 week or whatever period over here. Apart from that, we've been under this line for a very long time. So I think this is definitely going to be, it's going to be tough to get through, but once you do get through, that opens you up to move over to the over the tops to the 70s. So that's again further thoughts with it all, the here and now. We can see here, as I said, we're sort of coming down into this. Let's clear this up a little bit because we're getting a little bit scrappy here, aren't we? All right, so let's delete a few of these. See if we can make sense of what's actually happening. So we got a little recap. This is where we were at start of last week. I think I may have done this. Let's put this onto a lower time frame, onto the 4 hour at least. This is what I was saying last week, that we potentially had a line cut there. This little sort of fake out move that Aussie loves to do. As I said, I mean, this is why you trade the same things over and over, because you can pick out. They love to sort of work. Whoever's driving whatever market, you tend to see little patterns that happen time and time again with it all. But we said, and this is why I've circled it, I said, look, this is a very good area to trap people. Look at the lows here. Look at the lows here. Look at where it closed. Closed down here. There's a lot of people that have said, look, we've taken out these lows. Let's go. Bang. Chuck it on the shorts, this kind of thing. You know what I mean? And so what do? Well, they do this move, which is pretty much exactly as we planned out. Up a little bit, back test, obviously came down a little bit deeper, but the plan is still the same. It broke higher, came back, retested, and then took off. And it just squeezed and hammered everybody out there. And this is a price action that we've been seeing a lot recently with a lot of the markets. They're not mainly you can see this, it's sideways, and this is a short-term trader's paradise. If you're happy to sort of flip your sentiment, then this is great. But you know what I mean? It's coming up here, took out the lows, boom, pushed up. Where are the most recent highs? Here, here. What did it do? Came up here, took them out, boom, back down. Very weak through the second part of the week there. I mean, you can see this one candle here. This was, so what day was this? This was the Wednesday. So this was the CPI. So when CPI came in lower for the US, Aussie bang took off. You can see, look at this one candle. It's like over 1% in one move. It was like 80 points or something. We're about 61.1. 70 points up there, so over 1%. And it just boom hit up here, and it just never really sort of came back with it all. We had sort of FOMC come out a couple hours later, a little bit more hawkish. I think the market sort of was like really sort of flying off the CPI sort of data, going, yeah, okay, bang, they're definitely going to do it. It's very odd to have these things so super close together. And if you listen to what Powell was sort of saying during that, he was like, oh, we had a chance to think about it, but he really kind of brushed it under the rug. So yeah, I mean, I get that you can't alter your whole outlook just on one positive reading or print, but still, you'd think you would have sort of maybe sort of said, look, this is what we want to see. We want to see more of this, but it's certainly moving in the right direction. There's a different tone with that kind of wording to what we actually got, where it's like, look, you know what, that's just one print, doesn't really mean anything. You know what I mean? Like, okay, maybe I exaggerate that with the sort of the tone of the voice, but the point is still the same. He kind of just went like, yeah, whatever, that's just one thing. Not, hey, this is great, blah, blah, blah. It's like the market needs the praise for the work, or whatever work it's done, for the print that it came out with. Anyway, long story short, market didn't like it. It sold down. We had this was PPI the next night. That came in lighter as well. So that's the producer price index. So we've got CPI, consumer price index, and PPI, producer price index. And so both of those prices are coming down. So if it's cheaper to make things and it's cheaper to buy things, well, that's inflation sort of coming down. You know what I mean? It's not disinflationary. There's a difference in shit between disinflationary and, a slowing of inflation. I think that's another thing that people don't quite understand. They sort of seem to think that prices are going to come back. No, prices aren't going to come back. They've G'd up. That's what they are now. Us lowering inflation is just prices increasing at a lower rate. So, it's not going to turn on a dime. Anyway, look, we're getting into it there. So this is Aussies that came into the end here, and this little section here, obviously we sort of, closed out the week and that. But if you look at this here, and this is another thing with Aussie, Aussie loves its little inverted heads and shoulders. I mean, it's not necessarily going to be the big thing that turns around the whole lot, but, we've got a little shoulder here. Admittedly, this is on 1 hour, but, point's still the same. Try and make this as symmetrical as we can. We've got one shoulder, we've got a head, we've got a shoulder, we've got a neckline. So come Monday, if we see a push, if we see a move up, again, it can come down for a second arm. That's fine. Why is this not working? There we go. This, and there's a move up. It's not necessarily going to be the big changer, but remember back over here, this is the same thing. This is the one that we called as it was happening as well. Little head and shoulders, bang, pushed up, measured move, took out the measured move, and then fell down over there, time and time again. So, let's put a little measured move on this. So this will be a plan for sort of come Monday morning, if we can sort of get a bit of follow through. Obviously, these things are just about planning it out, and then, wait till you get that confirmation. Wait till that neckline breaks and it close above it. So above, just on eyeing it, wait, where we go, measure move. So eyeing it would be about here. So above sort of 20. So mid 20s. We get a close of 22, 23, which is not far off. We're on 15 now. A close there, that'll give you a breakout candle, back test, confirmation, bang, and that takes you back up to mid 660s. And again, look, there's no real reason. This is very much sideways. So if you're buying down here, selling up here, at least while it's in this range, you got a pretty good hit ratio. Eventually, this range is going to break, and we're going to see a meltdown this say, or we're going to see a larger break up to the top side there. But for now, you trade the ranges. We're at the bottom of the range. We've got a head and shoulders. We've got a defined neckline. That's the trade come Monday morning for Aussie. All right, anyway, on to a bit more. We're done 17 minutes just on Aussie. All right, DXY. Absolutely ripping. This is why the markets have been so infuriating the last couple of weeks, because you can see this range, takes out the lows, about to go, boom, takes out the highs, falls back down. Like, it's just all over the shop. This was from NFP the other week. And this is what I'm waiting to see the revised numbers next month. But, so much of the market were looking for this to break, didn't. High print number for the NFP, and market flies off. Left that gap, stuffed around here a little bit, CPI, closed the gap, and not only that, hammered right down. A couple hours later, Jay Powell's speaking, as I said, comes out a little bit more hawkish, flies up here. This was an interesting one. This was PPI here. And these are the moves that I say are pretty much good money maker moves when you got these. If you want to trade news events, they can be incredibly good, they can be incredibly bad, but one thing to always look out for news events, if you want to trade news events, pick out the point where the data drops. This was the point where the data dropped here. It sort of came down, made its way all the way back up. This is on a 1 hour candle, so within an hour and a bit, it had taken it out. So even sort of though it was dollar weakness style news, market still absorbed it and overran it. That means that they are hungry for the dollar. Despite, give them bad news, they'll still buy it. And you can see the flow-on effect that sort of come after that. So certainly if I'm going to be sort of trading, I try to avoid where possible news events, because they can be good, but they're so unpredictable. And generally there's a pretty good trade that sort of comes after the news event, but certainly one to watch, and that to sort of go, okay, if you see this setup, like as in where the data point drops and then it absorbs it and then runs and overtakes it, that's a good trade generally. Not necessarily as big as this. This is a big move, but this is obviously also coming off the back of Powell sort of coming out a little bit more hawkish. But you can see CPI move got undone, and then flowed right on here. So from this large drop down here, we found resistance at the 127, 127 retracement of that large drop down. It attempted twice over here, and then obviously sort of chilled out and sort of cooled off a little bit into the end of the week. On a higher time frame, looks very bullish. You know what I mean? That's pretty much like you're kind of taking out. You're kind of taking out a few bits. We have seen market obviously, value it at this line over here. So a close above 105.60 would have been okay. Yeah, they're rocking on now, but we are seeing the same sort of thing here where market had a shot. This is obviously coming down here. Where market had a shot here. This is your breakout point, breakdown point of this level here. Comes back up, retests the breakdown point. Actually, this is the breakdown point. What am I saying? That's the backtest level. So backtest level is coming back through here again. So I'll be certainly watching what DXY is doing this week, because they have just said, well, screw you. We don't care what you're sort of talking about. There's a change in terms of cut expectations through the year. I mean, everybody's been flying all over the place. ECB and BOC were the first ones to actually make a move and cut. But, the rest of them are just, like, oh, we're going to do, I mean, at the start of the year, people were talking like six cuts or some ridiculous sort of thing like this. And it's gone down to, down to 3, down to 2, now potentially looking at 1, and then is it 1 in June? I mean, the first one for the Fed was supposed to come in March. That was obviously just garbage. And now at the moment, so just bear with us one sec. Okay, and back. So where were we? Look, I was probably sort of rapid going just about these sort of levels over here. This was the breakdown level. Look, we could say potentially that this is a double bottom through this period of this pullback here. So if this were to break higher, and this is the thing, I honestly think we're going down, but you can't deny the strength of that DXY move. It was powering up there. So if this does decide to break higher, this gives us a little bit sort of against what I was saying a few moments ago about these measured moves giving us breakout levels. But this would be an area coming up. I mean, once you get up to the top here, you're going to be you're going to be hitting this top area over here. So again, look, if it does charge through here, this is where I'll be sort of looking. I don't think it's just going to stop at 105.90s and that. I think we're going up into this. I'll make this a little bit of a thicker price area, because I think this touching on this daily resistance into this sell area, this would be your top side target if we break this wick. So if you break this wick, let's put a little bit of a line on it here, going here, then I'd expect this move to come up like this, and then see just sort of sell down. Not necessarily going to go all the way back down here, could consolidate, could even see higher breaks, but that's the move if you take out that wick there. That's on the idea if this is a double bottom. I mean, another one would be this sort of falling resistance here. We've seen this respected, time and time again, and that little fake breakout to sort of snap everybody out before we came back down. This is almost a break, a retest, which I managed to close on the top side of it, and then it's exploded off to the top over here. Now, as I said, most things are sort of ranging at the moment, and yes, the Fed came out a little bit more hawkish, but we also had lower PPI, lower CPI. I think that's really going to limit the amount of topside action you can get. You can certainly see a little bit more flow on action, and this is certainly a bullish kind of structure, and you've got to respect that for the time being. But I would say that, you may see a little bit of an early push up, but I wouldn't be surprised if we see a little bit of a pushback from this area over here, and I'd be looking more of a push down to this area here, and then maybe see if we could retest for some support over here. It certainly was a very sort of strong reaction, and it sort of kept going. As I said before, it completed the 1.5? Again, lower time frame here. You can see yes. So pretty much exactly of the sort of drop down move here, we came in, found resistance at the 1.27 retracement. Excuse me. So yeah, we'll see how the week opens up with it all. I don't think we've got mass news coming out for this week, do we? Let's have a quick look. See what we've got coming on. So I'll drag this. There we go. So this is the week coming up. All right. So USD, got manufacturing index. Another thing as well is coming into the end of last week, we had sort of consumer confidence. Last bit of data for the week. As the data actually dropped, it wasn't particularly like an eventful, moving kind of thing. But certainly they did miss this year because, 69 previously, expected a tick up, and another it came in at 65. So not only did it, not meet expectations, it has actually moved back in the other direction. Reaction by the market wasn't incredible, but again, it feeds into that's one more. It's sort of like at the moment, it's a balancing act, and that feeds one more tick into sorry, one second. That feeds one more tick into the dollar weakness camp. So coming this week, USD related news. We've got Empire State Manufacturing, RBA rate decision. Pretty much guaranteed they're going to hold, but we want to see a hawkish move on that one there for the Aussie. And it's sort of like moving through pretty uneventful. It's kind of looking like normal unemployment claims. And then you got flash PMIs, not till Friday next week. So, it was very quiet 2 weeks ago, mass week of US data within the last 6 days, or, within a 6 day period. And then, it's really, where are we on DXY? It's really looking to sort of quiet down with the news again. So, I wouldn't be surprised if we see a little bit of cooling. I don't think we're just going to give this up straight away, but if we tick onto this one here. Cancel. No. So we're having a couple of technical difficulties here. Whatever. Can't get out of. Geez. Using new Opera sort of system. All right, that's a bit better there. All right, so look, this is what I was trading off last night, was it? Maybe it was a tighter. I think it may have been this one here. This is what I was trading off through here. So delete this for the moment. This little rising support coming here. Now, again, this is from the lows of PPI and then coming up through here. And so, as you can see, broke it and then sort of dribbled off. But as I always sort of say, last couple of hours of the week, you can't really bank too much on. It's not like, that's okay. Marcus decided to change its trend there. But we did see a little bit of a cooling coming into the end of the week. So, look, I still think we could see a little bit of a push down. However, I don't think this is going to die straight away. So, it's something to keep in mind that we may not be seeing the end of this US dollar push rally automatically. So, yes, I'll be watching to sort of see how it opens up early in the week. Moving on, we'll click onto gold. Gold obviously been trading incredibly heavy. As you can see, it's just, a couple of these sell downs. We had the China news. You can't see me doing the fingers, but the China news headline of them stopping their purchases. That when the NFP really just smashed it apart. We had a couple of big pushes here. Again, this was CPI. CPI came up here. Double attempt to get up past through this level and just could not do it. And then bang, smack back down. And we sort of dribble all the way down through here. The one takeaway is that coming up into the end of the week, 2330 is one level that I've mentioned time and time again. Excuse me. As being a very strong, I may have deleted the drawings on that one. No, this is the one here. This zone through here. So this 2330 level, for me, I've sort of been targeting both sides. Obviously, a couple of dollars either side of it all. So, down here to 19, boom. But, more or less, this 2030 zone through here, I feel has been a very crucial kind of point. Coming into the end of last week, we saw a bit of a big, look at this nice push up through here. And I'll get to a couple of things with this. It consolidated into the end of the week. So, we've got a nice little breakout box forming here. This little joint here. Bang. I think this is going to be your one. That's going to give us the indication if we're sort of more of the just stuffing around and, back down to these sort of low 23s, or whether we're going to see potentially another push, another leg higher, And then we can sort of be starting to target these, obviously 40s for their CPI high. Then we're coming up to the 50s, and then so on and so on, moving back up towards 2400. A lot of work to do, but this the interesting thing about this move here was that this is also happening at the same time as while DXY was running. So if we pop DXY on the 1 hour as well, we can sort of have a look at them side by side. And the good thing about these charts like this is that you can see with the dotted lines on the two charts, the vertical line, it will sort of line up with the same timing. So you can see here, if you look on the right chart, DXY ripping up to the top side through this period here, same period here, gold ripping up to the top side. And this is what I say about gold. I call gold sort of risk fluid because it can run with risk on, it can run with risk off. It can sort of defy these things. It can decouple from its movement of DXY, and we've really seen a bit of a decoupling of it the last couple of weeks, with DXY sort of up and down, and gold has just been more or less down. So it really kind of sort of ignored it a little bit. And again, we're seeing this period here coming into the end of the week. DXY going for another leg, moving up through here. Gold going, well, I don't care if you're buying the US dollar. We're still moving up over here as well. So I think a lot of the European election stuff is really driving the extra parts of these moves, certainly earlier in the week. And I think this last sort of leg through here could just be more stops being hit. But I think this means that DXY is probably running a little bit more on sort of like maybe weak euro opposed to complete sort of risk off kind of sort of stuff. And gold's like, well, you know what, we've done our bit, we're down here, okay, we're pushed up, and consolidating and holding the highs of the day and more or less actually highs of the week into the close is a bullish thing in a in a sort of bearish situation. So yeah, I think that's sort of certainly lining up for gold to have another leg a little bit higher. So whether you'd want to sort of put it from here or probably you could do it from the lows down here. I probably just do this last leg up here to be a bit more conservative. This gives you a price target back up at this 25.57 level. So this is where I'd be sort of looking on a break of, obviously we've got to get above these little wicks over here. We've seen the market try and bash it down from these levels before. But if we sort of get a break above there, I don't see why we can't sort of go up and test these 60s kind of area. And in the scheme of things, it's not sort of super high. Remember, we were here like, last Friday, just before that China headline came out and the market melted down. This was the biggest one-day drop since 2020. So there's a lot of stuff that's got to be undone from this kind of move here. So I wouldn't be surprised it comes up over here. This also is, I say, it sort of lines up pretty well with the top end of this channel. Because we're obviously not going to come right at this point here. Say it moves like here. As you can see, this little cross line over here, this lines up pretty well to sort of say that this will be another attempt of a breakout along here. Get above there. Okay, we've got something on. And certainly above, 23.90. Well, that's it. You're banging going on for your next wave. But that's, down the track. Deal with that when you get to that. The point is, it consolidated into the end of the week. This is a bullish thing. The sort of probably the strongest bullish sign that we've seen in the last couple of weeks, because this last sell down here, it has just been hammered into ever since it broke 24, came through, bang, down, bang. So the thing with gold is that what I mean. Every man and his dog was looking for this move up over here, 2,500. So was I. I mean, I've been trading gold obviously a long time and all the longs all the way through this area here. But you hear a lot of things, and it's almost like a cliche sort of thing of like, when your cab driver's giving you gold advice, or well, it came from stocks, but when your cab driver's giving you stock tips, that's the time to get out. Well, it's the same thing with gold. Gold's been absolutely rocketing up. I mean, look at the move through here. It has just been absolutely flying. Particularly the last couple of weeks, or last couple of months and that. This is from March, where we were down to 2,000, and then bang, up to 24.50. It has been an absolute mammoth trade for gold. So you're getting a lot of people that are starting to go, wow, this gold trade, how do I trade it? How do I be a part of it? Wow, we're going to the top. And that's the thing that I'm talking about, where people are sort of saying, when your everyday Joe Sixpack is deciding, what, I'm going to be a trader, and oh, I heard gold's moving, I'm going to buy some gold. What do? They screw them out of it all because they're not buying from way back when it was down here not doing anything. They were buying it after it's already made its massive move. And maybe they caught this part here as well and they're like, wow, I really am a trader. And what do? Smash it down, up, down, up, down, up, down, smash it down. This just destroys people mentally and also destroys people financially, particularly if they're not used to trading. You know what I mean? If they don't trade these things and they've just bought a bit of gold and they're like, okay, I'm going to get into it, and the textbook says I put my stop here. Well, I mean, look at the moves through this period, particularly here. We're taking out highs, we're taking out lows. Well, actually, these highs weren't taking them out, but this move here took out all these highs, these lows, lower, 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 reverses up down here, smashes down, comes back up. It is absolute shambles. Like, it is such an ugly chart at the moment. I mean, if you had never played anything and you were looking at this, you'd be like, what the hell? And, they'd probably be out of money. And they'd be like, well, screw this, that stuff, I'm out of that, boom. So that's one take on it. The other take now is that every man and his dog is looking at this line here, 2280. Everybody is going, yes, okay, wow, gold's done for. I mean, look at these sell downs. Look at how heavy they are. You know what I mean? Like, everyone's expecting, wow, we're going to sell down this, we're going to break this, and oh, we're coming back down here. People are saying, oh, I'm going to buy it more at 2000 and 2100. Look, I'm not saying this stuff won't happen, but what I'm looking at is the idea that while everybody was looking for it to go up to 2500, they smash it down. I think the market has kind of shifted their perception now, and everybody's looking at how strong these sell downs are, and they're all going, yeah, down here. This is my trade. This is where I'm going to really bank. And this could still come. You know what I mean? I'm not saying it isn't, but I think that, you got to look for where the pain trade is. And I think the pain trade is ripping the people that are short down here and hammering it to the top side now. Everybody that was long, that just jumped on the party, they're out. Everybody that was long with even deep down sort of technical stops, they're out. That's cleared the book of your longs. Well, most of it, you know what I mean? You got to be pretty ballsy to be trading gold from down here up to 2400, down 170 bucks from the highs and not take profit. They've cleared the book of the longs. They've piled in a whole bunch of new people trying to short this thing, waiting for this line down here. The market's looking down here now. Pain trade is to now rip it higher. So again, I'm looking gold higher. Short term, I think we get a test of this falling resistance over here, 2056, call it mid 2050s. I think that's a good area. Look at this, it's an area along through here. We've seen the prices, respected this a number of times. I think there's a good level that we could be looking for, 2350s, middle of. We break through that, we're going to be targeting 2380s. You break that, it's game on, and we're going higher. You know what I mean? Like, that's my outlook for it all. I think the trade is too crowded to people looking for the downside here. I think that's sort of like, I was saying to a mate the other day, look, you want to talk about when a trade's crowded? Look at my charts. How much just kind of stuff. I mean, there's always a lot of stuff on my charts, but, you look at these other areas here. This is where it got very crowded because it's all congested because it's just what's happening. You're not seeing these nice flowing moves. These are nice flow moves where it just carves through and that. But, once you get up to here, look at how crowded this is. And I think a lot of the market is waiting for this move. So I think we're going to see a push and a drive to the top side. There's a thing with, these kind of trending moves as well, where they say you get three thrusts. We've got one, we've got two, three. I'm still holding this as a price target, 2500. I think this is where the next move is going to come. I think this is going to come before we get sub 22. Excuse me. So that's my bigger outlook for gold. Short term, as I've said a couple of times here, 23.55. I expect a little bit of a sort of pushback from here. I don't think this is necessarily going to pump straight through. As I've said with a lot of these things, we get a move up here, get a little bit of a pushback down here. Second move down here will get us through. Bang, bang, and then that's my sort of price direction that I'm looking for gold. So I'll be buying, particularly, I got in at this last position at 23.11. which I'm still holding. It's, again, I'm trying to sort of flex this muscle a little bit more, but it's not really my style. But look, I think that certainly up to the 50s is a reasonable area. We've got a previous sort of support area over here. Comes in pretty much line. Enough things line up for me to sort of say that I think this is probably where we're going in the short term. All right, flip across. Copper, absolute nightmare. So buy level, that was great. A couple of things with copper here. I caught this move here. That was great. Stopped out for a loss, which is a pretty terrible sort of management. Caught this move here. Decided to hold it. Came back down here. Added more. Caught this move up here. This was a CPI move. Charged up the top side here. I was like, that's it. Bang. Double position. Loaded up. Breaking the highs. Got a big candle up here. Boom, 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 boom. Stopped out for even. It is absolute sort of nightmare. So I've got one last throw of the dice. As you can see, just at this level, just below break even at the moment. So we'll see how we go. We take out the lows down here, then I'm out, and I'm just going to let this thing sit for a while because, like I said, these things will break you financially. It's not breaking me, excuse me, it's not breaking me financially by any means. I've had sort of 3 trades on this, 1 for a stop out and 2 for break even. Well, actually, a 4th trade now, which is just below break even. But it breaks you mentally because, as I said, this isn't my style of trading. But these moves here, I was like 1,200 points up. I was like 1,000 points up or something. Like they're decent. They were decent paper positions that I was in. And I'm trying to hold for the bigger move, this kind of move up through here. But it's grinding. It's really sort of it's taken its toll. So yeah, I'm finding that a little bit difficult to sort of do. But as I said, I do think that we have upside coming. You take out the lows here. This is a very subtle higher lows coming through here. So, I mean, these kind of things, worth making a little bit of a note of, even if it is incredibly subtle. They are higher lows that are coming in there. So, yes, we've got the lower highs coming in here, but I think we're going to get a make or break this week. So I think this is going to be the period where we're either going to sort of come up here, charge up here, as I said. Next time we come through this level here, I'm calling this breakout. Main breakout levels above 47 or 470, whatever you want to call it. But yes, we'll have to sort of see how this one plays out. But certainly copper, back to the main trend. 1, 2, 3, actually dipped below this one, but pushed itself back up. So 4 touches on this main trend as it grinds down right in the middle of this buy zone that I put out a couple of weeks ago. So, the entry's perfect. In terms of trying to sort of flex the muscle of the swing trade, this is about as good as you're going to get in terms of, sort of risk management, but you know what I mean, entry wise. I didn't jump back into it too early down over here, to put it to like that. So we are looking for a little bit of a break higher, but certainly if we take out last week's lows, that's it, and I'm done. I'll move the stop up. Stop will just be around this level here, and then that's it. I'll call that for time on copper for the moment. So we'll have to sort of see how that one sort of plays out. And I'll finish off with China, though it is not really doing much, as it doesn't normally do too much. Look, it is respecting these levels. As we can see, it's been sold down a couple of times, but each time it sells down, look at the sell downs from here, that price target that we hit as we're moving up through this bit. And I said, look, these red lines, these are the levels that I expect the market to react at, and it, bang, sold it down, grinds back up, starting to sell down a little bit here. So again, look, I don't think we're going to be seeing, it has been slowly weakening, the yuan. So obviously this means US dollar moving up. But really, again, we're just in this range. You can't get too excited about anything with this. You know what I mean? It's, yeah, I can't even really comment anything on it, like head and shoulders, but head and shoulders, it's at the top of a trend, so that's not where you're going to see your head and shoulders. Flush out, call it that. But really, the market sort of dropped right down here. I mean, that was a big drop off. You see how much it sort of sits in it. So the interesting thing with this is it's got a 2% range it can move throughout a day, which is quite a big thing because really this whole bit here is only 0.6 of a percent. So, it's not really moving around too much. But again, we're at the top end of this sort of little period here. I'd expect a little bit of a push down here. Goes in line with a little bit of US dollar sort of weakness across the board. All right, so that's about it from me. A little bit of a longer one this weekend as I sort of go on with a couple of bits of greater sort of themes, but it is it's going to be a decent week for Aussie. We got RBA coming out. Look, everything is tipping to be a little bit more hawkish. We did have where are we at here? We did have um, CPI come in hot last time. Remember, so expecting to hear some notes and some pointers on that and say that that's not acceptable, and we are going to be doing what needs to be done. This bullock check is supposed to be a little bit more hawkish than low, but by all accounts and that, they seem to be avoiding everything like the RBA does, like a lot of Australia does. They pander to people's feelings more than actually getting the job done. I don't want to hurt your feelings by letting you know the rates are going to be high. But I'll just keep them high anyway. Like, you know what I mean? It's if you're going to do it, just say it and just get it done and get it over and done with. But I think that's really going to be the hot topic. The fact that CPI is moving up, it's in the wrong direction. Fed coming down. A lot of these other big sort of G7s, G10 currencies coming down. Aussie still very high. So, that's what I'm looking for. So that's Tuesday, 2:30 local time, Melbourne time. And we'll sort of see how that plays out. But again, I think this could be the kind of start of something that gives it a bit of a push to the top side to get a bit of that breakout. All right, that's about it from me.